Have you ever wondered how the share market works? It's a bustling financial marketplace where ownership stakes or shares of publicly traded companies change hands. Think of it as a global bazaar where buyers and sellers from all corners of the world come together to trade these shares. Now, these shares aren't just paper certificates or digital entries in a ledger. They're actually small pieces of a company that you can buy or sell. When you own a share, you own a part of the company it represents. However small that part might be, you share in the company's profits and losses, its growth and its potential. And why does this market exist, you may ask? It's there to enable companies to raise capital and for investors to have a platform where they can invest their money. So the share market is essentially a marketplace for buying and selling shares of publicly traded companies. Now, if you're curious about how to get started in the share market, it begins with educating yourself. Dive into the world of stock trading, learn about different investment options, and understand the risks involved. There's a wealth of resources out there, from books to online courses, that can equip you with essential knowledge. Next, set clear financial goals. Are you looking for long-term wealth accumulation, income generation, or perhaps short-term trading profits? Your goals will guide your investment strategies, so make sure they're clear and achievable. Choosing a brokerage account is your next move. This is your gateway to the share market, allowing you to buy and sell shares. Pick a reputable institution or an online platform that suits your needs. Lastly, don't underestimate the power of research and analysis. Get familiar with the companies and industries that pique your interest. Investigate their financial health, market trends, and news that could impact their performance. Remember, knowledge is power in the share market, so arm yourself with as much information as possible. After you've done your research and you're ready to invest, it's time to think about diversification and risk management. Diversification is a savvy strategy where you spread your investments across a variety of assets. Imagine your portfolio as a pie, if you will. You wouldn't want one flavor to dominate, right? So diversify by investing in a mix of stocks, bonds, and other assets. This way, if one investment performs poorly, others may do well, balancing your overall risk. Now let's talk about risk management. It's like wearing a seatbelt while driving. You hope you won't need it, but it's vital for safety. One such tool is a stop-loss order. This allows you to preset a selling price for your stocks, limiting potential losses if the market drops. Another strategy is asset allocation, where you adjust the percentage of different asset types in your portfolio based on your risk tolerance and investment goals. Managing your risks effectively can help protect your investments from significant losses. Now that you understand risk management, let's delve into the actual process of making investments. You'll use your brokerage account to place orders, buying shares of companies that align with your investment goals. But remember, the journey doesn't end with just buying shares. Investing requires regular monitoring of your portfolio. Keep a watchful eye on the performance of your investments and the broader market trends. This vigilance will help you make informed decisions about when it's the right time to sell or perhaps buy more shares. But how do you stay in the know? It's all about staying informed. Follow financial news, track economic events, and keep tabs on any changes in your portfolio. The more you know about the market and your investments, the better positioned you'll be to respond to changes. Staying updated and making informed decisions is crucial to success in the share market. Finally, two key aspects you should consider are having a long-term perspective and understanding the tax implications of your investments. Now, why is a long-term approach beneficial? The stock market is a volatile beast, and its fluctuations can evoke strong emotions. However, it's crucial to avoid knee-jerk reactions to these short-term changes. Instead, focus on the bigger picture. Remember, Rome wasn't built in a day, and neither is wealth. Patience can be your greatest ally in achieving your financial goals. On to taxes. Yes, they can be a bit daunting, but they're an integral part of investing. Taxes on capital gains and dividends can significantly impact your net returns. Therefore, it's important to consider tax-efficient strategies, such as holding on to investments for at least 1 year to qualify for long-term capital gains rates. Remember, patience and planning are essential in the share market, so keep a long-term perspective and understand your tax obligations. To sum it up, the share market is a place to buy and sell company ownership shares. To get started, you'll need to educate yourself, set financial goals, and open a brokerage account. Diversify your investments to manage risk and make informed decisions by researching and analyzing market trends. Always stay informed and maintain a long-term perspective. Don't forget, tax implications are a crucial part of this journey. Investing in the share market can be rewarding, but it's important to be well informed and consider your financial situation and goals before participating. Happy investing.